Welcome. We're diving straight into a massive topic for anyone in the creator economy: UK tax on AI-generated income. Now, everything we're about to cover has been put together by the experts at Pro Tax Accountant, giving us their absolute latest insights for the 2025-26 tax year. Right, let's kick things off with a question that should really make you sit up and listen. Could your AI art, or that little online side hustle that's doing pretty well, be the very thing that puts you on HMRC's radar for an investigation in 2026? Well, as we head into this new tax landscape, the answer is increasingly yes. The game has totally changed, and you need to know the new rules. So here's our game plan. First, we're going to meet HMRC's new AI detective. Then we'll get our heads around how to classify your income, which is so important. We'll look at the big choice, sole trader or company. Then we'll navigate some of those sneaky digital tax traps before wrapping up with a clear compliance plan and where to turn for expert help. Okay, first up, HMRC's new AI detective. Let's talk about the multi-billion-pound problem that HMRC is throwing all this new tech at. And here is the number that explains everything. 47 billion pounds. That is the UK's estimated tax gap for this tax year. That's the absolutely staggering difference between the tax that should have been collected and what actually made it into the government's bank account. That's money for our schools, our roads, the NHS. So you can see why closing this gap is their number one priority. So how are they doing it? Meet Connect. This is HMRC's super powerful data system. It's basically a digital detective. And just look at what it's plugged into. We're talking your bank accounts, here and abroad, your card payments, property records, what car you drive, and really crucially for creators, it's pulling data from places like Amazon and Etsy. It even looks at your social media. It then pieces all of this together to build an incredibly detailed financial picture of your life. And this is where it gets really clever. The AI in Connect is programmed to spot what they call lifestyle inconsistencies. So on the left, you've told them you earn £35,000 a year. Fair enough. But on the right, your public Instagram feed is telling a very different story. A shiny new car, fancy holidays, designer gear. The AI's job is to spot that huge gap between what you say you earn and how you appear to be living. That's what sends up a massive red flag and triggers a much closer look. And here's a pro tip you really need to hear. HMRC's AI is looking for patterns. A one-off photo of a nice meal isn't going to get you into trouble. But a consistent, sustained pattern of high spending and luxury living that just doesn't add up with the income you've declared, that is exactly what the algorithm is built to find. All right, let's move on. Next, we're talking about classifying your AI income. And honestly, this is the first critical decision you have to get right. Is what you're doing just a hobby, or has it actually become a trade?
So to figure that out, HMRC uses something called the badges of trade. It's basically a checklist they use to see if you've crossed the line from a hobby that makes a bit of cash into a formal business, a trade. They'll look at things like, are you doing it to make a profit? How often are you selling things? How organized are you? Getting this right is fundamental because the moment you're considered a trade, the full force of income tax and national insurance kicks in.
That's not all. Here's where most people go wrong. Once you know you're trading, you've got what is probably the biggest strategic decision you'll make for your business. Are you going to be a sole trader, or are you going to set up a limited company? This table lays it out perfectly. As a sole trader, you are the business. Your profits are taxed with income tax, which can go up to 45%, and you're paying national insurance. The scary bit? Your liability is unlimited, meaning your personal assets, like your house, are on the line if things go wrong. A limited company is a totally separate legal thing. It pays corporation tax, which is lower, and it gives you limited liability, a corporate shield that protects your personal stuff. The trade-off is just a bit more paperwork. And this chart just makes that tax point crystal clear. There's a tipping point. Look, if you're making profits up to around £70,000, being a sole trader is often simpler and works just fine. But once you start earning more than that 70K mark, the limited company structure nearly always becomes way more tax efficient because you can pay yourself a small salary and take the rest in dividends. Forecasting your profits is absolutely key here. Stay with me, the next point might surprise you. We're about to navigate some of those big digital tax traps. We're talking about the really modern stuff that catches creators out, like NFTs, R&D claims, and the massive changes coming with making tax digital. Okay, let's talk NFTs. For HMRC, it's actually pretty simple. They look at crypto assets like NFTs and they just see property.
And that definition is so important because it means when you get rid of one, whether you sell it, swap it, or even use it to buy something, that counts as a taxable event.
Which, of course, leads to the million-dollar question, or maybe the multi-thousand-pound tax question. When you sell that AI artwork as an NFT, is that profit a capital gain or is it trading income? Because the answer makes a massive difference to your tax bill.
And here's just how big that difference is. If it's a capital gain, say you sold one piece you were holding as an investment, you'll pay capital gains tax at 18 or 24%. But if HMRC decides you're trading NFTs, selling them often, in high volumes, like a proper business, that profit gets classed as trading income. That means it's subject to income tax of up to 45%, plus national insurance. And believe me, their Connect system will be looking at your crypto wallet activity to decide which one it is.
Now let's look at another huge change coming our way, making tax digital, or MTD. From April 2026, if you're a sole trader and your income is over £50,000 a year, you will have to use special MTD-compatible software for your bookkeeping. And get this, you'll need to send updates to HMRC every single quarter, not just once a year. It's a total shift in how we report our finances. And here's a quick did you know for anyone working with cutting-edge AI. You might be tempted to make a research and development tax claim, but you have to be so careful. Right now, HMRC is investigating about 1 in 5 of all R&D claims. If you get it wrong, the penalties can be up to 100% of the tax you tried to save. It is not an area for guesswork.
Okay, so we've looked at the challenges, we've seen the traps. Now let's get to the good part, the solution. This is your 2026 compliance plan, a simple 5-step strategy to give you total peace of mind.
Here is your action plan. 1. Plan your business structure. Look at your profits. If they're heading north of $70K, it's time to think about incorporating. 2. Get ready for MTD. If you're a sole trader earning over $50K, get the software now. Do not wait. 3. Classify your income. Go through everything and document whether it's trading or a capital gain. 4. Master your expenses. Keep perfect digital records and keep your business and personal spending completely separate. And 5. Mitigate any audit risk. If you get one of those nudge letters from HMRC, deal with it straight away and be totally transparent. And this quote just sums it all up perfectly. The era of benign neglect by tax authorities has definitively ended. Meticulous, organized records are your best defense. Honestly, in this new world of AI surveillance, having your books in perfect order isn't just a good idea, it's your absolute best protection. Which brings us nicely to our final section, getting expert help. Because this is all about navigating this complex new world with real confidence. Now, of course, we have to include an important disclaimer. Everything we've talked about today is for general guidance. It is absolutely not a substitute for getting professional tax advice that's tailored to your own unique financial situation. So, before you make any big financial decisions, you really must consult an expert. For advice on anything we've covered today, AI income, business structure, any other tax matter, you can get in touch with the team who put this all together at ProTax Accountant. You can reach them on WhatsApp or by phone on 07956 89912, or you can drop them an email at info@protaxaccountant.co.uk. Thanks for joining me.